Hey, welcome to the second episode of Consulting with Ronald Raymond. I do have a special guest with me on this particular episode. Very happy to have him, Mr. William Simpson, the fifth. What's going on, man? You doing all right today?
Yeah, I'm doing fantastic. How about yourself?
I'm doing well, doing well. Welcome to the podcast, and I appreciate you, taking some time out. So, William is in Nashville, Tennessee. Is that correct?
Yep.
Okay.
hmm
And he is a MLO, a mortgage loan originator. Tell me, how long have you been doing that role? How long have you been in that role?
5 years.
Five
Maybe
years.
5 years.
5 years.
It'll be 5 years in March. Yep.
Okay. So what made you decide to kind of get into that role? Or I guess in sense before you became an MLO, were you in the financial field before that as well?
Yes. So I've been in the financial field since 2015. So it'll
Okay.
be 10 years.
10
Yeah. So
years. Oh man.
mhm.
Unk. Okay. All right. So tell me, so what made you get into the financial field in the first place?
Well, to be honest with you, I initially started doing construction, did that for a little bit, but there was no work really being done in Michigan where I'm from. So I went over to numbers because I love math. Math is
Yeah.
fun for me.
Yeah.
So I went over to the financial side of it when I was living back at home in Michigan, and just never left. So that's pretty much how I got into the financial world. Still doing
hmm
something with houses, just not constructing them.
Yeah. Yeah. Okay. Cool. Cool. And similar story as well. Love numbers. Got
hmm
into it for specifically for that reason. And for those who
hmm
have not listened to the very first episode of this podcast, I kind of talked about the purpose of what this pod is. This pod is to really to just help people, just to educate. That's the biggest thing is education.
hmm
So that's hence the reason why I had you on because I have a lot of people, a lot of clients that are looking to buy their first home, and of
hmm
course they don't know what to expect. So
hmm
a person like you who's been in the field, of course, you can be able to you are a resource that can kind of help people to be able to understand what is needed, what the ideal client looks like. And then also too, I mean, every scenario ain't gonna be perfect. It's not
No.
gonna be perfect. So, and if it's not that, then what steps can that person take to be able to, you know, counteract that and then come back to the table? So,
hmm
once again, just appreciate you, taking the time. So, how have you been able to help clients dream come true? Because honestly, you know, that's a dream for a lot of people. Like, hey, I want to be a homeowner. So how have you been able to do that? And then how does that personally feel when you're able to help someone with that?
Okay. So I've been working here for 8 years now. My anniversary just passed on the 16th, actually.
Congrats,
And
congrats.
thank you. And their brand here is to educate and help members to become effective financial stewards. That's what the
Mhm.
objective is. And so educating really is the ideal way that I enjoy helping out those I talk to. It's nothing like getting someone who is brand new to the home owning world,
Yep.
being able to sit down and give somebody who has a blank slate some information, some knowledge, and to see that how that knowledge uh, changes their mindset in the future. And so
hmm
that's what I thoroughly enjoy helping somebody, and things start to click, they start to
Yeah.
understand things, they start to make changes in their lives, and then when they come back to me, they're in a position to actually get the house that they've been wanting to get. And so there's just something about that being able to help somebody and educate them. That's the most fun way. There's a
Yeah.
saying, the saying, you can give someone a fish or you can teach them how to fish. Teaching
Yeah.
somebody
Yeah.
how to fish is a lifelong, reward. So the education, even after you didn't bought a house, you can educate other people
Yes.
and as
Yes.
well. So that's what I thoroughly enjoy. And it's just a very comforting feeling knowing that I could tell somebody, hey, your loan has been approved, or well, I
Yeah.
don't actually do that position, but I always call them anyway when I find
Yeah.
out that their loan is approved. I'm like, guess
hmm
what? That's how I am with my members. I try to get very professionally personal with them.
Yeah. 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 I understand
So,
that. Yeah. Yeah. Because honestly, I mean, is someone who came from that world as well at my last
mhm,
position. I mean, I was
mhm,
able to see like what telling someone you are approved. Someone may have not even expected to be approved,
Yeah.
and all of a sudden you tell them like you're approved. And I mean, I'm talking about like just almost tears of joy,
Emotional. Yeah.
because in that position you really become almost like a almost sometimes a therapist, because sometimes they'll tell you, lifelong issues, whether it's with credit or whatever the case may be, and you honestly get drawn to that and you just want to help, and as you mentioned, even just educating that person to say, all right, well, this is what you need to do. And as you mentioned, teaching them how to fish now, they can, go fishing on their own without,
Mhm.
without the help. So kind of tell me the steps for someone who is that does not know, who's never went through the process. They want to purchase a home. What are the steps to getting pre-approved, or what are the steps like? How easy is it? What does it look like?
Well, I mean, it really, the process in itself, it's extensive, but it's really not as stressful as a lot of people realize. Well, it kind of depends on everybody's situation.
Yep.
Um, for those who are more on the self-employed side, who has, tax returns, more documentation involved, the more documentation that we have involved in the process, the little bit more intricate it's going to be. But outside of that,
Mhm.
it's really not a hard process. We work hand in hand with our members. It starts out with originating. There's four parts. Are you talking about the application process? Or are you referring to just in general
Yeah,
the process to being pre-approved
yeah, just in general,
in
like
general?
so if
Okay,
if
no
I'm a
problem.
client, I'm coming to your office
Hmm.
and I want to purchase a house at 123 Main Street, and I don't
Hmm.
know, it's for sale. I love it. What do I need to do?
Well, you did the right thing by first getting yourself pre-qualified.
Mhm.
It's always important to know how much you actually can afford.
Yeah.
And so to go out and look for a house and you don't know how much you can afford, you bring me a house and it turns out that you won't be approved for that house. You didn't waste all that time searching for a house.
Yeah. Heartbreak
So
too.
go exactly.
Yeah.
And you didn't fell in love with the house, you didn't named it. But
Yeah.
anyway, you come back and you want to talk to me first. And I tell you, okay, well, this is the amount that we can approve you for. So now when you go out and look for a house, you're looking at a house with a purpose. And any house that you are finding, you know that you can afford to get it and your approval odds are good. So it's
Yeah.
always important to talk to a loan originator first, get yourself pre-qualified or pre-approved, so you actually know how much you can spend on a
Yes.
property, and
Yeah.
then go out with the real estate agent and get yourself that
And then go
house.
from there. Awesome. Because a
Mhm.
lot of times too, what people don't know, like when you have that letter, it shows that you are a serious buyer.
Yeah,
You
and
know,
that's
like
that's important.
yeah, yeah, like it's not, I'm just because I'm sure realtors get and they get inquiries all the time of people saying they want to
Mhm.
do this, want to do that, and then they're probably not able to do it because they should have probably went to the originator first and at least got
Mhm.
that pre-approval, and then okay, you can go to a realtor and say, hey, I'm pre-approved for $250,000. And then that realtor then from there can do their job to find you
Mhm.
all of your options. Even if it's not that 123 Main Street, there may be something on Phillip Street that, that's even better. So
Yeah.
yeah, no, I love that. So what does a what does the ideal client look like for you? So in a sense of when they're about to walk through the door and talk to William, what what would help them to be prepared? Like if they're coming in, what would you tell them? Hey, make sure if you have this, this will help your speed up your process.
Okay. Well, no, well, there are two things that we look at as an originator before we get somebody pre-qualified. So the first thing is DTI, or debt to income ratio, and then
Mhm.
the other thing is FTC, or funds to close. So since we have to determine your debt to income ratio, I need to know what that income is. So I
Yep.
always tell people, if you're coming in and when you're about to sit down with a loan originator, have last 30 days of pay stubs and have the last 2 years of W-2s. It's
Mhm.
always about consistency. That's why we ask for multiple of everything. We want to make sure it's always going to be consistent, and that down the road that you'll still be, able to afford the loan that you're acquiring today.
Yeah. Yeah.
So that's always what I tell people when it comes to income related. Make sure you have your W-2s, make sure you have your pay stubs. funds to close side of things, we need to see where the funding is coming from,
Hmm.
for down payment for closing costs. So if you're getting a gift, we have a gift letter. We ask that that part gets taken care of. But if you're
Yeah.
coming in, you have the money already in an account, bank statements. That's
Hmm.
what we ask for. So if you
Yeah.
have like at any other bank, just give me the last 2 months of bank statement so so I can see that that money has actually been in there. We can't just take cash from under your mattress.
Yeah.
We need to know
And
where it came from.
exactly. And so, and for my listeners that are people are listening, if you have, is what people used to say, money under the mattress,
Hmm.
take, you can't do that. You
Yeah,
can't take
yeah.
money from your from under your mattress, $20,000, let's say, and the money has to have a paper trail. And what is it probably at least how long does it need to be? Because you said the last 30 days bank statement. How
Well,
far back?
we look at the last 2 months.
Last two
So,
months. Okay,
but
last 60
I
days. Okay.
always yeah, I always recommend people to have that money in there a little bit longer, at least 6 months, if you have the ability to do that, because not everybody do. So that's
Yeah.
why that 2 months is also kind of nice.
Yeah.
But yeah, so typically for us, we look at the last 2 months of bank statements.
Okay. All right. And then there's, as you mentioned, the gifts and DTI. Um, we're not going to go too much into the weeds of that because there is a deeper explanation of what
Oh
for my
yeah,
listeners who may not know what DTI is. Maybe at a later episode, I'll kind of go a little bit more into details on that. But so I'll ask you this, and this is for, because unfortunately, I know I've been there, and
hmm
where I thought I was going to be able to help a client. And just for whatever reasons, the circumstances, whether it was DTI, as you mentioned, whether it was didn't have all the funds to, whether it's to close or funds for the down payment or even just credit. So,
hmm
what are some common issues that borrowers run into that prevent them from being approved?
That's income ratio is the number one.
Hmm.
That is the number one. That's the deal breaker because funds to close, there are ways that we can work with you on the funds to close.
Yeah.
But debt to income ratio, I mean, once we see that your debt to income ratio is exceeding the guidelines, some places are 43%, some places 45%, some places 50, but that debt to income ratio is what really is a critical part of the approval process. I know you say you're going to talk about that a little later, so I don't want to dive too deep into it, but that is a very important thing. Making sure that you don't have um, a lot of high balances is what kills a lot of credit reports, and a lot of people don't know that. High balances on credit cards, things like that, have a high impact on your score. And
Yeah.
so, a lot of issues I've seen is people out there spending a lot of money on these credit cards, getting these high balances, and their credit scores getting tanked,
Yeah.
and it's because of that. And so, their scores is really right there below where the threshold of approval. But as soon as they get those loans and everything taken care of, lower those payments, that score go up. That usually is a common solve for that issue. So my biggest issues I have are people who overspend and it
Hmm.
reflects on their credit, and then just their debt to income ratio is an issue because of whatever reason behind
Yeah.
that. So.
Yeah. I love that. And you know what? And I, with the Ronald Raymond consulting, business I have, that's something that I do coach to as well, is
Mhm.
exactly that. Not overspending, creating a budget, sticking to that budget. Creating a budget is easy, but sticking to that budget, that's the hard part. And
The
and so
first
that's
thing, yes, yes,
yeah.
mindset is mindset. If you don't
Hmm.
have the right mindset, then the rest of that, everything I have to say after this is not going to help you.
Yeah.
Because the mindset is you got to be driven, controlled
Control, discipline.
when that financial exactly all of
Hmm.
that. But if you
Hmm.
don't have that desire to do any of that, then really, what help am I going to be to you?
Yeah.
So
Yeah.
yeah, what you're
Yeah.
saying, I'm in agreement.
Yeah. So many people create, what they call those New Year resolutions. And then
Hmm.
what they do for those first 2 months, and then it just kind of falls away. And that's how I think the important thing of having a financial coach is making sure that you're on top of that. Because what is it? We play sports. That's how. Matter of fact, that's how we first met was at a
Hmm.
basketball tournament. I don't know
Yeah,
I can't remember who won that particular tournament.
I'm not
Okay, sorry.
sure.
Yeah.
Uh,
So
I tend to forget irrelevant things. Go
yeah.
ahead.
So, but the biggest thing is coaching, right? Having
Yeah.
a coach, it improves. Like, let's say Pat Mahomes or a LeBron James. You got Andy
Hmm.
Reid, you got Eric Spoelstra, you got Phil Jackson. All these coaches, they help improve that player's game. So same thing with a financial coach is being able to help a person that may not be as disciplined. I always say,
Hmm.
break the habit, break the cycle. Break the habit, break the cycle. We all have habits, whether it's bad habits, bad spending habits that you mentioned, running the credit up for whatever reasons, because it could be a financial hardship that people go through.
That's
That's the reason
understandable.
why.
Yeah.
Yeah, exactly.
Mhm.
But it could just be you just like to eat out a lot, you know, and that's in America. That is for sure something that I see most of my clients. That's the number one kicker. It's like, let's let's stop eating out so much. Let's eat at home,
Yeah.
you know? So, but break the habit,
Is that
break
fan
the
loud? Can
cycle.
you still hear me good?
Oh, no, you're good. You're good. You're good.
Okay, cool. Okay. Sorry.
So any best practices or advice that you would have for someone that's looking to buy a home for for the first time?
It all starts from before you get to me, really. Live simply, spend wisely. If you find you get on annualcreditreport.com, you can get a free credit report
Hmm.
once a year and review it. See what debts you have, see what you got going on your credit report. That would better position you to adjust your financial situation so that when you do go in to speak to me, that we are like, oh, well, let's get the ball rolling. We're good to go. We can get you moving forward and get you into your home. So I always tell people good practices is just being on top of your credit report. Look at it every 6 months, especially if you're trying to buy a house. Look at it as often as you possibly can. Make sure
Hmm.
everything is still staying within guidelines that you are able to keep your credit cards down 30% or less. The utilization need to be at 30% or less. So
Yep.
if you have $1,000 limit, $300 or less.
Yep.
That's what that is.
Hmm.
So that would best help your credit score. Those are just some little practices. The 30% definitely is a big help to a lot of people because credit cards are going crazy right now.
Yeah. Yeah. Interest rates.
Uh,
Yeah.
it has, yeah, I mean, not just the interest rate. I'm talking about like people utilizing credit cards for spending because
Hmm.
the cost of living is rising, but the
Yeah.
income isn't. So
Yeah.
people are starting to go to other means of spending
Yep.
habits, which is credit cards, and that's been a big thing. So just try to live simply, try to keep your credit spending down as low as possible. Sit down, budget, just all the stuff that you hear on the regular.
Yeah.
There are really no exceptional, from ideas or guidances that I can say besides live simply, spend wisely, be
Hmm.
self-controlled. Um, and just do the best you can to try to keep your income high and your debts low.
Yeah, and I'm going to let you go here in a second, but I want to bring up this one story that me and you kind of talked about. It was a few years
Hmm.
back, and I want to. This is to my self-employed clients,
Hmm.
those who are not W-2 employees. So you were telling me about an experience that where trying to remember how it went. I think what it was that when you are self-employed, you have to get the last 2 years of tax return in order to get
Yes,
someone approved, right? And
last 2 years.
what a lot of self-employed people do in order to, with taxes and everything else, they don't necessarily report
They
all of
write
their
off a lot of
income.
stuff too.
Yeah, they write off stuff, write off, write off, write off, write off.
Yeah.
But what issues can that run you in when you get to the table? And let's say you're a person who is self-employed that has $250,000 a year of income, but you're only showing 75,000 of that.
Hmm.
And all of a sudden, because you make the income, you want a specific house. So what can that do for a self-employed client?
Well, it's detrimental. Honestly, I had the numbers I'm about to say are fictitious, fictional, but I had someone that came in and they were making like 300,000 gross, but they
Hmm.
had so many things written off. They literally brought home 40,000 a year. That's gonna kill you. That's what we look at. We look at 40, we look at that 40. We don't look at your gross because you don't
Yeah.
have that after all your expenses and everything you know written off.
Yeah.
All that money is gone. We can't utilize that. We only can utilize the 40 that you bring in.
Hmm.
So keep that in mind. You know,
Yeah.
we look at your net. We don't look at gross. Now, gross is for pay stubs. We look at gross
Hmm.
income, but for self-employed, we look at your
Yes.
net. So keep that
Yeah.
in mind. If you can be writing off a lot of stuff, that may save you on the tax side, but just know on trying to utilize your income to get something
Hmm.
that you're striving to get, that could be harmful to you
Yeah.
for
Very
sure.
harmful. Yeah. So
Hmm.
I wanted to definitely leave that with that because I know I have a few self-employed clients and I do have a few that listen as well.
Hmm.
And I've seen that issue even on my end. So
Yeah.
definitely we keep that in mind. And we're not tax professionals, so you want to talk to your
No.
CPA, your accountants, but at the same time, like, yeah, just be mindful of that. Well, hey, William, I appreciate you, taking the time out, your busy schedule. You're actually looks like you're on lunch right now at work yourself right now,
Yeah,
so I
I'm in the
yeah.
office.
Yeah, so I appreciate you, taking the time out. Listeners, for further information, please go to my website, ronaldraymondconsulting.com. There you'll be able to find all of our my email address to be able to contact me. You also will have my Facebook and of course information to the Spotify, which then if you have questions for William Simpson, I'll be able to partner you with William for be able to answer any questions. So hey, I appreciate you,
Yeah,
man.
no problem, no problem at all. And I
All right,
do lend
thanks.
in Alabama.
And hey, what'd you say?
I do lend in Alabama.
All right, there you go. There you go.
All
You
right,
heard it here. All right, man. I appreciate it,
man.
brother.
You take care.